2023, I think, will go down in the record books in terms of the investment markets as well as the world in general. This is Tom Asprey with the Viper Report. I've been following the markets since I changed from being a biochemist in the early 80s, and this was a fairly contentious year from the start. Those of you invested in stocks this year are feeling pretty good, while those that are out of the market are wondering what they missed. This comparison chart shows the performance of the QQQ in red from the start of the year, the SPY, and then the IJR, the S&P 600. On January 8th of 2023, I noticed there had been a change in the market, as I noted in my contribution to Forbes.com. There were significant improvements in both the NYSE Composite advanced decline line, as noted by this bullish formation, and also the S&P Trust, the S&P 500, had a couple of dojis and then closed above it, and the AD line had flipped back to positive. Just a week later, in my review of what Wall Street strategists thought about stocks in 2023, I noticed that they were looking for stocks, the S&P in particular, to close at 4078, about where it was. This was a strong signal, along with the technical evidence, that Wall Street strategists were indeed too negative. As I pointed out in this excerpt, the New York Times, which has just recently written another article on Wall Street strategists, at the time concluded that the analysts who forecast the fortunes of corporate America have rarely been more pessimistic at the start of the year than they are in 2023. I picked up on that as well, as it's an indicator that one of many that I use to analyze the market. Furthermore, I thought analysts were really wrong, as they were expecting very poor earnings. A 2.2 quarterly decline. FactSet was looking for a 3.9% decline. I didn't think that was wrong. I've never been a fan of earnings estimates or earnings projections. I prefer to deal with the hard data of the market. That's the supply and demand, which going back 40 years has proven to be right. And most of the big guys were bearish. JP Morgan, Goldman, won't be easy, and as I said, they're looking for it to 4078. Well, of course, now we're about 4748. And I pointed at the time back to 2017, when strategists were looking for a target of 2368, but the S&P closed at 2673. For much of 2023, many analysts were looking for a drop down to 3,500, and some are still bearish. My bullishness was reinforced in March when there was a Zweig breadth thrust buy signal, which I know at the time was the only seventh buy signal since 2000. Most people discounted this or didn't even know it happened. And then in November, we got another ZBT buy signal in early November, which helped kick off the recent rally. For me, that was also a time to recommend the small cap stocks like IJR. Since the start of the year, I've been encouraging you to get into the stock market, as I've seen too many instances, for example, near the 2003 low and the 2009 low, where people were burned by the stock market and did not get back in for the next cycle. Many feel like this graphic. They're throwing darts, but they aren't hitting any targets. I think my technical advice on the market can help improve that for you in 2024. As of Friday, December 22nd, here are the portfolio holdings for the Viper ETF report. We've taken some profits in a few markets, but are holding most of them for now and looking to add to others. We recently added XBI just on December 11th, and it's already up 17%. I hope you'll give yourself a chance to succeed in 2024 if you go to theviperreport.com you can click on the Viper Report here and you can sign up, just $34.95 a month, though prices are likely to go higher in 2024. Cancel at any time. I don't think you'll regret it when it comes to this time next year. Thank you very much.